Hello, I'm Noel Lim on ASEAN Speaks by Maybank. As sentiment on Chinese property stocks lifted last week, what is the outlook for bonds? We also unpack our latest reports on Philippines remittances, ASEAN equity strategy, Thailand's telco spectrum, and our forecasts on Vietnamese banks. Chua Hak, co-head of macro, discusses with the analysts.
Hey, hi, good morning. 22nd August. Just a quick recap on last week. The MSCI World Equity Index fell 1.6%, snapping 4 consecutive weeks of gains. Nasdaq fell 2.6%, while the Bloomberg Galaxy Crypto Index plunged by 13% on the week. ASEAN markets were more resilient, while Hong Kong markets were down by about 2%. China issued a drought alert on Friday, a warning sign that the recovery in the second half is not on solid ground, and that climate change may disrupt supply chains to keep food prices elevated. This week, all eyes on the Fed Chair Powell on his speech on Friday at the Kansas City Fed Annual Monetary Policy Symposium at Jackson Hole. The prelim PMI data for the US and Eurozone will be a focus. Eurozone PMI may show the private sector contracting the most since February last year. In Asia, central banks in South Korea and Indonesia will hold their central bank meetings. GDP is expecting the Bank of Indonesia to initiate its first rate hike. Singapore will be reporting its July CPI inflation and industrial production this week. A strong inflation print could mean that the MAS may have to tighten yet again with a stronger Sing dollar, even after 4 rounds of tightening. Prime Minister Lee in his National Day rally speech last night announced that Singapore will no longer require masks, except for public transport and healthcare settings. Some of the companies reporting earnings this week include AIA, Sinuk, Meituan, PetroChina, Ping An Insurance, Sinopec, Qantas, Woolworth, and Zoom. Today, we have Winson on China property and renminbi bonds, Jue on Thailand 2Q GDP, Zamros on the Philippine Central Bank rate hikes last week, Anand on his latest ASEAN strategy report, Wasu on Thailand's telco merger and the fight over spectrum rights, and Tan on his 2 favorite Vietnam banks. So let's kick off first with Winson. Winson, China property bonds and stocks moved higher last week on hopes that the government will provide more supportive measures. Can you update on the onshore and offshore bond market moves? What are some of these measures and possible restructuring? And are these large enough to make a difference and provide a backstop to the China property crisis and prices?
Hi, morning, Habin. Yeah, the regulator has been having piecemeal policy support, and the latest one being asking the state-owned China bond insurance company to provide guarantee for selected developers on some of their bond offerings onshore. And the first batch of the names mentioned on the news include, for example, Longfor, Cezanne Gemdale, Country Garden. And I think this measure is quite important in order to avoid contagion effect, because recently there has been sign of stress deepening on China property developers spreading from junk to high-grade names. For example, Longfor being one of the top 10 names by sales, and it's also quite highly rated at BBB flat, has seen its stock and dollar bond prices plunging in recent weeks since July. So given the sign of policy support, market sentiment has reacted positively. The dollar bond, China property bond prices jump, not just for the developers that will benefit from the measure. It also includes other names that are not mentioned on the news, for example, Wanke and China Jingmao. And certainly the government does recognize that a prolonged liquidity crunch for property developers could affect housing completions, and if not properly addressed, it could actually evolve into a major social problem. But I think the key question is how long and how big this measure will be. Even though the near-term reaction is positive, eventually we will need to assess the extent of this support, like what is it going to be the size of the bond issuance, how many developers will actually benefit, and also the length of the support. I would say we need to be careful, because this measure alone may not be a game changer.
Winson, on the overall CNY bonds, the renminbi has been weakening and is now near its 1-year low against the US dollar. The PBOC is surprised, however, with an interest rate cut. So what are the flows and what's your recommendation currently on CNY bonds?
Yeah, last week, the PBOC announced a surprise rate cut by 10 bp on both the 7-day reverse repo rate and also the 1-year MLF rate. And I think this week they will follow with additional 10 bip cut on the loan prime rates on potentially both the 1 year and 5 year tenor. We are mildly bullish on China government bonds, on growing concern about the China macro, and also prolonged structural weakness in the property sector, because eventually if this spread to the credit risk onshore, it will actually increase the heaven demand for the China government bonds. On a year-to-date basis, we have seen huge foreign outflows, but there are teething signs of stabilization with foreign net inflow into the China government bond in July. This is actually the first inflow in 5 months since January. Yield differential has narrowed between the US Treasuries and also China government bonds. FX spot dollar CNY also higher, but if we look at the FX forward points, it is actually negative. So that means foreign investor investing in CNY bonds can actually get yield pickup. But of course, speaking of China bonds, we need to differentiate between the government bonds and also the credit bonds, especially the US dollar credit. So on US dollar credit, I think we still need to be careful and very selective, because some of the developers, they may continue to struggle despite the policy support, and bond restructuring for defaulted names may be a long drawn process, and the regulator may potentially prioritize home buyers over the creditors.
Okay, thanks, Winson. Let's move on to Jue. Thailand released a second quarter GDP last week, which fell below expectations. What are the key highlights?
Good morning, everyone. Thailand's second quarter GDP growth came in below expectations at just 2.5%, below both consensus and our estimates of above 3% growth. So Thailand is still the laggard among ASEAN 6. It's the only economy in the region where 2Q GDP remains below 2Q19 levels by around 3.2%. Some highlights would be that household consumption accelerated by 6.9%, driven by the reopening tailwind that boosted spending in services, particularly in restaurants and hotels and recreation and culture. But investment fell by 1%, weighed down by public investment due to a lack of major new projects, and private investment also eased because of the fall in imports of industrial machinery following the weaker baht. Net exports of goods and services swung to a huge deficit as export growth eased while imports gained momentum. Overall, the NESDC narrowed its 2022 GDP growth forecast to 2.7 to 3.2% from the previous 2.5 to 3.5. We are maintaining our forecast at 3.2% for this year. This implies that growth will pick up to around 4% in the second half compared to 2.4% in the first half. And that's partly due to the lower base in the second half of last year because of the Delta wave outbreak. And also we think that the uptick in tourist arrivals and continued rebound in private consumption will help to offset easing goods exports because of weakening global demand.
So the Thai baht has been strengthening of late from its lows despite this weak GDP print. What do you think is driving the baht recovery? And do you think the tourism recovery still has legs and can surprise on the upside for the rest of the year and next year?
Yeah, the baht has indeed outperformed this month, and this is because of optimism surrounding the rebound in tourism, and also the expected narrowing in current account deficit as oil prices are falling and Thailand is a net oil importer. The government is expecting 10 million tourists this year. That's around 1/4 of 2019 levels. And as of mid-August, the year-to-date number was tracking at 4 million. And the top source markets have been regional countries like Malaysia, India, and Singapore. The tourism recovery may surprise on the upside, especially if China, which accounts for nearly 1/3 of visitor arrivals, eases restrictions towards the end of the year. But despite the rebound in tourists, the current account recorded a wide deficit of 4.3% of GDP in the first half of this year because of large remittance of profits by foreign firms. And we estimate that every 4 million tourists add around 1% of GDP to the current account via the tourism revenue. And to achieve a balanced current account in the second half of the year, that implies around 10 million tourists would be needed in the second half alone, which is higher than the 8 million needed to hit the government's target. Next year, the government is looking at 30 million tourists, and that should definitely swing the current account into a healthy surplus.
Great, thanks, Jue. Zamros, the Philippine Central Bank BSP hiked by another 50 bits last week. The BSB has been one of the most hawkish central banks alongside Singapore's MAS. What are the drivers driving the rate hike, and is there still more to go?
Hi, morning, Habin. Morning, everyone. BSP last week raised the policy rate by 50 basis points, which pushed the policy rate to 3.75%. And this was the fourth rate hike so far this year, with a total 175 basis point rate hike after the massive 75 basis point hike by BSP in July. So we think that there are three factors that what makes the BSP to be one of the hawkish central banks in the region. Firstly is on inflation itself. Inflation has been for 5 months now staying above the BSP's target range of between 2 to 4%. In July, inflation was 6.4%, which makes the year-to-date inflation now at 4.7%. So clearly the focus by BSP is on anchoring inflation expectations. The second point is on the GDP, the economy itself. The BSP is taking the view that the economy is able to absorb rate hikes by BSP. We know that GDP expanded in the second quarter by 7.4% year-on-year, and the first quarter by 8.2% year-on-year, which makes the first half of this year, the Philippines economy expanded by 7.8% year-on-year. This is on top of the stable labor market in the Philippines, with the unemployment rate for the first half of this year staying at 6.1%, improvement from 7.8% for 2021. Then finally, we think that the rate hikes by BSP will help the performance of peso against the US dollar. Overall, we are looking at another 25 basis point rate hike by BSP to push the policy rate to 4% by the end of this year. Habib.
Yeah, Zamra, so remittances have not recovered to pre-pandemic levels. Remittances was a key reason for driving the current account into a surplus in the Philippines before the pandemic. Is there any info or data on the proportion of Filipinos, who returned home during the pandemic are now starting to, go back overseas for work? Because I would think that demand should be high given the tight labor markets in many countries.
Well, actually, the annual overseas Filipino workers remittances in 2021 of 31.4 billion US dollar actually it's already surpassed the pre-pandemic level. When we compare with 30.1 billion US dollar in 2019. This is after the 0.8% drop to 29.9 billion in 2020. And after recording the 15.35 billion US dollar of remittances in the first half of this year, we expect full year remittances of 32.3 billion US dollar, or 2.8% growth for this year. Unfortunately, the up-to-date official data on actual numbers of overseas Filipino workers are lacking. But nevertheless, the latest figures on the numbers of OFWs was released back in March this year by the Philippines Statistical Agency. That is for the year 2020, which shows that the number of workers fell by 19% to 1.77 million from 2.18 million in 2019. But nevertheless, the Philippines Overseas Employment Administration was quoted by the media recently, saying that the deployment of overseas Filipino workers are slowly returning to levels seen before the pandemic, but unfortunately without stating any specific numbers. But the thing is, the statement is consistent with the recovery in remittances to surpass the pre-pandemic levels since last year, which suggests recovery in the overseas Filipino workers deployment as the global economy reopens. Habin.
Okay, thanks, Zamros. Let's bring in Anand. Anand, I think on your latest ASEAN strategy report, what are the key highlights?
Hi, good morning, Hakben, and good morning, everyone. So it's been a relatively good fortnight for ASEAN markets. We did see a broad rally across all major indices. I think the Philippines actually stood out as one of the biggest gainers. The PSEI actually gained 6% over the last 10 trading days. And that's on the back of more favorable macro data. Also, 2Q results from across the region, not just the Philippines, have been largely within expectations. So that's really confirming the earlier thesis at the start of the year that the recovery momentum in ASEAN coming out of lockdown last year is pretty strong, and we would see the results coming through, especially for mobility-focused sectors like consumer. That's been the case across all the countries. Even in Malaysia, some of the recent results we've seen from stocks like Berjaya Food, Carlsberg, Heineken, very consumer sort of facing businesses. The results have been very robust. So that's been another lift for ASEAN markets.
So Anand, what are the key changes to the top buys and top sells?
Yeah, I think in terms of rating bias, if you read through our report, you'll see there's still a bit of a positive tilt to analyst recommendations. They do see a lot of value in sectors like banks, as well as consumer and commodities. So in this edition for the Philippines, we've raised the ratings for Metropolitan Bank, as well as Samira Mining to buy, given attractive valuations vis-a-vis growth prospects. In Singapore as well, we still see value in the planters. We're a little bit more defensive now because CPO prices have corrected. But for something like First Resources, we have upgraded it to buy as well, as we see a value there. On the flip side, one notable downgrade in this edition is the Thai consumer finance sector that's been downgraded to neutral. We do see loan growth slowing and some uptick in NPLs. So something like Sawad, we have downgraded to hold from buy previously. And some other notable downgrades to hold include in Singapore, Genting Singapore, as well as Netlink. These are really downgrades not led by anything fundamental, but more because of the market rallies. We are seeing the upside to target prices being compressed quite a bit. So your money, you should switch out to other stocks which we are recommending, which would give you better upside.
Great, thanks, Anand.
Thank you.
On Wasu, we'll cover on the Thai telcos. So there seems to be a lot of controversy and regulatory uncertainty over the spectrum rights from the two telcos, DTAC and True merger. So Wasu, from a layman perspective, can you briefly highlight some of the main issues and controversy?
Sure. So there has been no official statement from the regulator NBTC just yet, but a few people outside of NBTC have stated that the spectrum return from the new company of True and DTAC should be in order, and it should be the spectrum return should be one of the conditions for the merger approval by the NBTC. And one of those people that mentioned something like that was Advance's CEO. The CEO mentioned that allowing True and DTAC to combine all of their spectrum holdings would be unfair to Advance because Advance had bid for spectrum licenses under different circumstances. Advance CEO also said that the telecom regulator has been considering a potential measure related to spectrum return from the new company. So that's what we have heard so far on the issue. And in this paper, I try to quantify the risk of the spectrum return. So basically, we believe that the new company can return up to 55 megahertz of bandwidth without putting it at a disadvantage against Advance. Currently, the new company has 6.5 megahertz of bandwidth per 1 million mobile subscriber. Giving away 55 megahertz of bandwidth would bring down the number to 5.5 megahertz per 1 million subscriber, which would be on par with Advance's number. So if the mandated spectrum return is more than 55 megahertz, we may have to revisit our calculation of the cost synergies for the new company.
So Wasu, I guess the merger will mean that the Thai telco structure will move back to a duopoly, which could bring back quite a bit of pricing power to the remaining telcos. So what do you think will be the final outcome? Will there be a big rate increases, and which company will be the beneficiary and your top pick in the sector?
Okay, so if we assume that the merger is approved within October and the merger is completed within this year, then next year, 2023, would be the first year of operation for the new company. And you shouldn't expect any price increase or higher pricing power within the first year, because that first year, 2023, would be the year that the new company will be very busy doing internal restructuring and network integration. And when telcos do network integration, it would be quite messy. The network quality would drop here and there, giving Advance the opportunities to steal market share. So I believe that in the first year of operation of the new company, the competition would still be quite strong, and Advance would be the main beneficiary during the first year of operation. But from the second or third year onwards, maybe we could start to see some easing competition, but do not expect easing competition in the first year. And in that first year, Advance should be the main beneficiary. But from the third year onwards, the new company should start to enjoy some cost savings from the elimination of overlapping resources and also network sharing when investing in new network sites.
Great, thanks, Wasu.
You're welcome.
Let's bring in Tan. So Tan, you have a special report on the Vietnam banks. How much have the bank share prices sold off this year and why? And do you expect any regulatory risks?
Yeah, thanks, Hapin, and good morning, everyone. Well, first, I would like to reiterate our views that we maintain the positive view on Vietnamese banks' fundamental. We see the strong credit growth between like 12 or 14%. A very robust NIM of 3.8 or 4% can be sustained over the next 4 years. So this, along with the rising fee incomes in Vietnam, which thanks to both the bancassurance and other capital market services, which drive the ROA of Vietnamese bank to regional level of 2%. And why in Vietnam we enjoy very reasonable capital regulations. So that's why banks in Vietnam can maintain very reasonable balance sheet leverage of like 9 or 10 times. So these all together easily help Vietnamese bank to enjoy like 20% ROE. So this view we have been maintained throughout since last year to date. But the market, in Vietnam, they don't really understand the bank's fundamentals, especially in the market dominated by retail like this. 80% of the market daily trading values from the local retail. And in the first half of the year, they were overly concerned and reacted to any news about like COVID and even the regulatory headwinds against the bond market. So they think that this would create the NPLs in the system and would, dampen banks' profit growth and ROE. But actually, banks' first half results come out very strongly. They enjoy 35% profit growth year on year, and the ROE continue to improve like to over 23%. And the asset quality and balance sheet shape is very solid. So we just want to update the investor on Vietnamese bank during this time, and we reiterate the view that banks in Vietnam still in the very high growth and robust ROE cycle. So it's time to buy. And in the first half of the year, because of the retail overreaction, bank share has pulled back by 22% on average, and even some bank lost like 40 or 50%. And now it's trading at around like less than 1.4 times PB for over 20% ROE. So we see that a lot of good investment opportunities have emerged among Vietnamese banks, and we maintain our top picks in the top 3 names, Techcombank, Vietcombank, and MB Bank.
So Tan, could you elaborate on why Techcombank and Vietcombank are your top picks?
Yes, for Vietcombank, it's still what we call the proxy bank for Vietnam because it is the largest market cap. It has strength in all business segment. The ROE is solid at 20%, and yeah, the foreign room is available. So it's a proxy bank. And if you compare Vietcombank to other proxy bank in the region, like Bank of Central Asia in Indonesia or HDFC in India, this kind of proxy bank always trade at between like 4 or 5 times PB. while Vietcombank is now traded at only 2.8 times, which is below its 5-year average and below its normal good time like 3.5 to 4 times PB. So we believe that is a very reasonable valuation for Vietcombank. For Techcombank is an emerging private sector bank. It has the solid fundamentals as Vietcombank. It is the bank focused on the affluent segment and the upper SME and private sector companies in Vietnam. And it's a leader in the fee income generation. So everything is very comparable to Vietcombank, and the management is committed to ROE target of 20%. The only thing that dampen its valuation is now that the foreign room ownership is full, so that's why it's fully exposed to the retail. But during this time, we see that there's blocks offer, and with the solid capacity to deliver 20% ROE, and the valuation is now only 1.2 times PB. We see the huge, good investment opportunity with Techcombank.
Great, thanks, Tan. Yeah, that's all we have for today. Have a good week ahead.
For more information, speak to your trading rep and download our reports from the Maybank Trade app and follow us on Spotify and Apple Podcasts. Have a good day. I'm Noelle Lim on ASEAN Speaks by Maybank.